problems. Joining.
Hey guys, welcome to the webinar. Looks like Diane's hopping on. We were having some technical difficulties getting started, but looks like we have some people joining now, and we have Diane now too. So her and I got that figured out. We'll give everybody a few minutes to hop on.
Okay, I'll go ahead and share my screen. So should we just stay in the video, or do you want me to show my screen, Bracken?
Yeah, let's wait a minute because we still have quite a few people joining.
Okay.
So let's give them another 30 or so seconds.
Okay.
Happy Thursday, everybody.
Yeah.
Excited for the weekend.
Exactly. And we're having what appears to be a nice sunny day here in Michigan. A little bit of wind, but heading into spring.
Same here in southern Utah, so we are excited. All right, well, looks like it's slowing down a little bit. So I'm Bracken. I'm going to be the host today. I'm here with BusyBusy, and we have Diane Gilson joining us, and we're super excited. She has like 30 years of experience in the accounting construction industry. To give a little bit more background on what she's been doing in that time, she's done everything from working at a big CPA firm to banking and auditing, and for the last little bit, focusing in on her company, Info Plus Accounting. So I can confidently say that she's an expert. We're super excited to have her joining us today. For the last 8.5 years, Diane here has really honed in on, becoming the best QuickBook advisor that there is. So one thing that I think is really cool.
I have to jump in there, Bracken. That's 28 years, not 8.5. I started the company in 94. Yeah.
Oh, well, so, for the last 8 years, no, you should admit that you're an expert. Okay. We're excited to have you. But for the last 8 consecutive years, she's been recognized as one of the top 100 QuickBooks Pro advisors in the nation, which is, it's really cool. You've really been helping contractors become the best that they can be. So to give you guys a little bit of a schedule for the webinar, we'll have a Q&A at the end, but as questions pop up for you, please feel free to type them in. And if they're applicable to what we're talking about at the moment, I'll interject and have Diane answer those. And then at the end, we'll go over them all and see what we can't get you to answer.
Cool.
And yeah, we're excited. So we'll take the rest of the time over to you.
All righty. And I see somebody wrote in that it's 84 in Florida. So
Wow.
Welcome everybody, regardless of where you are around the country. Always fun to meet and greet those folks that are out working in the industry. So glad to have you here. So I'll go ahead and pull my screen up and share that. And so is that full screen, Bracken, as far as you can tell?
Yep, that's looking good.
Okay, and just give me one more moment to pull this up the way I would like for it to be. Okay, great. And so you'll see on our first slide here, how to dramatically increase your profits using the magic of job costing. In our cartoon, of course, is pretty self-explanatory. Unfortunately, this is what too many people do, is you just kind of keep going and doing the same thing over and over and just hope something magical is going to happen. Well, you can make magic happen, of course, but you just need to do something to make that magic happen. It just doesn't swoop in unexpectedly. So first of all, let's just talk about this, here's a way that you can be thinking about this, about winner jobs and loser jobs. And I did this as simply as I could in order to show you, this is a case where we have a winner job and we're feeling pretty good about that. We're a $1 million company. This particular job, we've earned $500,000. Our cost of production is $375,000. Our gross profit's $125,000. We hit our gross profit target of 25%. Yay. Okay, unfortunately, on the other side, we've got this loser job, and they had the same revenue, but our cost of production, things kind of went sideways here, there, and the next place. And of course, with BusyBusy at Bracken, a good chunk of that almost always has to do with labor. labor is the riskiest part of what's going on. So maybe on this job, we weren't tracking time and paying attention. And all of a sudden, by the time we got to the end of the job, we discovered we lost $50,000. So we're not feeling good about that particular one. Came in at a negative 10%. Overall, it left us with $1 million of income. Sounds kind of nice, but unfortunately, we only made $75,000 on those two jobs put together, or a 7.5% gross profit. So at least the whole company didn't lose money on these two jobs, but that's a pretty low percentage. And if you assumed that each one of those jobs you put 120 hours in on, you spent 240 hours, which means you actually earned $313 if you're the company owner, project manager. You earn $313 per hour for your time. Well, that sounds like quite a bit, okay? But let's look at what else you could be doing. Now, let's say...
Sorry, Diane, just to interject quickly, can you make your screen full screen so we can see it a little bit better?
Yeah, it should be full screen. You should be seeing. Are you seeing one that is where there are two slides side by side?
Yeah.
Okay, well then I apologize for that. I thought I selected, let me go back over into my Zoom screen.
Technology, it's so fun until it
isn't.
It's not.
Yeah. Can you help me, Brecken, in my meeting controls?
I'm thinking on your screen, Diane, we just need you to hit, if you look below your slide, looks like a little computer monitor. Let's see where your mouse is. It's right under the brown bar. There should be a couple of buttons for you to click there. Are you seeing those?
Can you see where it says meeting controls?
Yeah, so if you're gonna go up from that and to the left.
How far to the left?
Pretty far to the left, all the way up into your slide. Down, 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 down. And by the magnifying glass. And
this is on my PowerPoint. And I just lost you again. Okay. Okay, I seem to have lost Brecken. I'm going to leave and rejoin. Are we back, Brecken?
all right, well, I am back.
Okay, all right.
I don't know what's going on here.
I don't know if maybe somebody can put in the Q&A whether they lost both of us or just one of us, and then I will know. I did find the screen sharing option. So it says I'm going to stop my share, and then I will share screen.
Thank you, Catherine. Catherine says she can see both of us. So I apologize, guys. Thank you for your patience with us.
Yeah.
Fun technical difficulties, I guess.
Okay, so I am going to, as far as I can tell, choose the full screen. Are you able to see a full screen now if I say share?
Yep. That's
Okay,
perfect.
that's the
See
one
it
we
very
wanted.
well.
Okay,
Awesome.
well, all right. Well, that gave us
Hey, we're
a
back.
moment to recover. Okay.
Yep.
All right. Thanks. So, back to we've got a winter job. We've got a low profit job. We made 5% on this. And so things are looking a little bit better. We ended up at almost double what we had when we had that loser job at 15%. And assuming the same 240 hours, you've earned 625 per hour. So you've come pretty close to doubling your rate of return for the investment. And we're talking kind of about the owner's investment per hour here. Okay, so the next thing that we can take a look at is what if, these what if scenarios are kind of fun. What if you didn't bother even working with that loser or low level job, and you're not going to make quite as much money, but you make 125,000. You only spend 120 hours, and wow, your earnings per hour have gone way up. Now that 125 might not be enough to cover all of the rest of the cost of your company, but nevertheless, you can see what happens when you eliminate that loser job. And then, of course, the last thing that we want to take a look at is what if we get two winter jobs coming in at the same time? We bring both of these in at the appropriate gross profit, our target gross profit of 25%. Now we're up to 250,000 or 1,042 per hour, but it's 240 hours. So you've earned $250,000. So it's pretty interesting to see when you compare and contrast what it looks like when you have winner and loser jobs. So, okay, so the truth is that job costing is going to be what's going to let you track these things and see what's going on. And it's going to be the fastest, the easiest, and the best way for you to make a pretty dramatic change in your profits without having to add more employees or sell more or work harder. Okay, so all of us would like to earn more without having to work any more any more hours, any more difficulties, etc. So my goal for this web class is to help two different kinds of people. You might be new to job costing, and in this case, hopefully you'll learn why job costing can have a major impact on your profitability. And if you already use or think you understand job costing, we're going to take a look at a few new ways to optimize its value in your business so you can see even greater profits.
Hey,
Okay.
before you hop forward, is there a
Sure.
particular aspect of job costing that you feel like stands out above all others that we should pay specific attention to as we're going?
Well, I wish I could just point out one particular thing, but you know what? It's a combination of factors. Okay. And that's kind of what I want to go through here, is because you're going to get some bang for the buck by doing one particular thing. But when you start combining those things together, that's where you're going to see the really dramatic changes. And that's kind of what I want to cover going through
Good to
this.
know.
Okay. Okay. All righty. So, when it comes to seeing critical financial data over the years, I mean, I've been watching this for a long time now, hanging out in the numbers realm. The traditional dark ages way, and I worked in a CPA firm, okay, is that you find out your company's results after your accountant prepares your tax return. Okay, so those of you who really have it together and get your stuff in at the beginning of the year, that might be March or April. Okay, but maybe you're on extension. So it might be September the following year before you even find out exactly what's going on with your company. So, of course, that's a long time after you really need the information to run your company better. So here's why it's hard, okay, is because you don't know whether you're making money or losing money in your company, thinking about the whole company throughout the year. You don't know whether you're making money or losing money on individual jobs. And without that information at hand, you're actually working in the dark. So there's the easy way and there's the hard way to earn money. Okay. And so here are some questions. Why should I care about job costing? Why not just assign all of our materials cost into a materials cost account or all payroll into a single payroll expense account? Well, we'll talk about that shortly. Isn't it a lot of extra work to enter a job name and a job code to our transactions? Okay, these are the kinds of things that people think about, when they think about job costing. Ooh, this is going to be difficult. Okay, it's really not. Can I just keep an eye on the checkbook and wait until year-end tax time to find out how much money my company made or lost last year? We just touched on that. That's kind of a tough way to go. And is it worth my time to implement an internal job costing system? So we're going to show you some financial results, speculative financial results here. I like to do the math. I can't, ethically share exact company results for the people I work with, but I can lay out some scenarios and we'll do the math on some of these things. Okay, so you can reduce your cost of production by using job costing estimate versus actual reports. So there really isn't anything worse than finding out 1, 2, or 3 months after a job has closed, because you might still be accumulating bills up to that point. And you get all the way out at the end and you look at the numbers and you end up feeling kind of like our little girl here. So, not very good about the whole process. So instead, if you can set up your job costing system to report estimated costs versus actual costs and income as you move through each job, that way you're going to be able to spot your variances and correct your problems long before they spin way out of control. So by using those estimated versus actual reports for jobs, you're actually creating this improvement circle. And so after you've completed the job, you can locate exactly where actual costs were different than anticipated. So you're likely able to see things as they happened, but then also afterwards, you can pick up and do things with those numbers. And you can find out where you can improve your processes so you can prevent problems on a look forward basis. You can consistently use those estimate versus actual reports to make it easy to find out where you can reduce your direct cost, or maybe be more accurate at estimating. Okay, when you find out that something is taking longer than you estimated, then that's kind of a reality check. So you can either improve the process or you can say, gosh, we need to revise our plan on a going forward basis. And that also means you'd be revising your pricing. Okay, so by going through this process of continual improvement, you should be able to enhance your gross profits by 5% or more of your gross revenue. Okay, so 5% isn't a lot. If you go in and start tweaking and looking at things carefully, you can pretty easily find that 5%. So if you want to grab your calculator, I don't know if people are going to have enough time to grab their calculator, but your scratch pad or whatever. And depending on your revenue, okay, not your bottom line, but your gross revenue, 5% will likely be a pretty significant dollar amount. So if you take your annual income and let's say you were $1 million company, that'd be $50,000. Now, that could be, you could do something good with that, right? And if you're a multi-million-dollar company, you can multiply that out. Or if you were a $500,000 company, you could still do something with 25,000. So no matter what size you are, this continual improvement process can make a really big difference in what you end up seeing in the gross profit portion of your company. So another thing you can do is use your job costing to locate and charge for lost or invisible costs. So one of my clients found out after the fact, okay, that they had missed $700 on a time and materials job. Okay, so what that meant was they hadn't passed it through to the customer. So now that meant $700 out of their pocket. And not only that, if they were doing a 33% markup to get them to a 25% gross profit, then that ends up meaning $933 that didn't come into their pocket that should have. So that, when you think, oh gosh, this is a really nice gift I gave to my client. Okay, so what does that $933 mean? Now, this is just one instance of one thing falling through the cracks. If you're doing your job costing and doing it properly, you're going to not miss these things. Okay. So, but if you are missing those, that's going to maybe mean less money to your retirement account, or maybe $933 extra that your daughter or son now needs to earn for tuition. Okay. Or maybe $933 in debt and interest that doesn't get paid off, which of course that multiplies on its own as well. But in so many cases, all these pieces and parts are getting missed. Okay, so you want to use your job costing to locate and charge for lost or invisible costs. Now, when you're doing a T&M or time and materials job, you can use that information to invoice. But even if you're doing a fixed price job, you want to make sure that you track that stuff through for change orders. Okay, and it's really time. I'm going to say stop with those invisible and costly gifts of time and materials to your customers. Now, I'll tell you what, if you really like doing that, my phone number is down here, okay, at the bottom of the slide, and you can give me a call and I'll have you do my next kitchen remodel, okay? All right, because I like gifts, okay, so when you are able to track these things and pass those through to your customers and so on, it means that both you and your customer are being treated fairly. And as someone who's doing this work and putting your time, energy, and sometimes tears into these jobs, you should be treated fairly. So that's what this is all about, is making sure that you earn what you deserve to be paid. Okay. So we've kind of stepped through this, and you can see, I'm just going to repeat it one more time about how when you start shifting around, eliminating those loser or low profit jobs, some people feel like, well, I made something. Okay, so that's good. Well, in fact, maybe it isn't so good. Having a low profit job, yes, does kind of put something on your bottom line, but the return for the energy and everything that goes into getting these jobs done is just, sometimes you're just further ahead, and many times you're further ahead walking away from jobs than you are continuing and just getting a very low profit margin or taking that risk of losing money. Okay.
Sorry, if
So
you can go back, Diane, I feel like
sure.
that's a really big light bulb moment for a lot of business owners. So, I mean, my question, and I'm sure some other people's questions to you would be like, what's the biggest aha, duh moment that you've had when it comes to job posting with these like winner and loser jobs?
Yeah, I was in banking for 13 years. Okay. A good chunk of that was in the management accounting department of the bank. And we did, at one point, we sat down and did a study. We had, I believe it was 13 different branches, and we had 2 or 3 pretty stellar branches that were doing very well. When we sat down and lined up all the costs and all the income for each branch, we found out that we had several on the negative end. And it turned out, when we really looked at it, the losses of the several branches that were not doing well at all totally offset all the goods, the above the anticipated profit on the stellar branches. So what they did was they were just they weren't totally wiping each other out, but close, close to wiping each other out. And then, of course, that just kind of left a few that were in the middle. And ultimately, it wasn't an easy decision to make, but they decided that they needed to sell those branches. And it just made an immediate difference. Okay, nice. In terms of it's pretty dramatic, because now all of a sudden you've got fewer jobs or fewer branches, okay, requiring less time and energy. Yeah. And then you've eliminated the losses, and it just can make a huge difference. That's where I first really kind of got on this. And then of course, when I started my company, lady at a luncheon I was at said, you need to go over and work with those builders. They really need some help, because her husband was a builder, and she was trying to take care of his books. And so she says, yep, go over to the Home Builders Association and check in with them. And so it was a perfect fit, So.
Match made in heaven. Do you feel like you've had, I'm sure you have, but some examples of clients who have had that big light bulb moment as well, I think would be, I mean, I would love to hear a little bit more about that.
Yeah. One fellow that I worked with, it took us a little bit to get his whole system in place. I mean, it's not something that happens with the wave of a magic wand, but after getting his numbers in place and taking a look at them, one of the things he wanted to check was, he said, it just seems like I'm putting a lot of work into the bids and everything else on my commercial jobs, whereas the residential jobs are much smoother. If people call in, I can go out and get the job done. And it turned out that when he looked at the results in his gross profits, there was a 10% gap. He was making 10% more gross profit on his residential jobs than on his commercial jobs.
The big
so
difference.
Exactly. And so, what he did, he decided he was going to focus. It took him a year or two to get everything shifted, but he ended up shifting everything over into the residential side. And so that can make a big difference. Okay, just knowing that. Now, for people who are remodelers, they might want to say, well, how much am I making on, what's my gross profit on kitchens versus additions, or bathrooms versus decks? So maybe you find that you have one area that you're really stellar in and that you want to expand on, and then cut back on some of the things that aren't as great, or figure out what's wrong with the ones that aren't as great. So yep, can really have a big impact on your direction. Okay, so this is, and here we're going to be talking about different types of work. So again, this is very similar to what we showed you before, but if you've got type A jobs and type B jobs, and type A jobs, you're making 25%, type B jobs, you're making 11%. What if you just shifted everything back over into the type A jobs? Okay, you say, oh, I'm going to specialize. I'm going to work in this one particular area where I can make a better profit, and look at the difference. In this case, it's a $70,000 difference and a 7% difference in gross profit. Okay, so that's bumping your gross profit up by 39%, almost 40%, by choosing to work in one type versus another. Okay, so again, we like people to think about, what would a 10% gross profit increase look like for you? So if you could change your gross profit from 13% to 23%, or from 15 to 25, or from 18 to 28, of course, you know what you are, but if you look across different jobs and types of jobs, I would not be at all surprised that you wouldn't see those kinds of gaps between different kinds of work. So if you have 500,000 in gross sales, that 10% would be 50,000. That's if you're at $500,000. If you're at $1 million, it means 100,000. And of course, if you can multiply that pretty easily, if you're at 2, 3, 8 million, whatever, that's going to be add money to your pre-tax income. And of course, remember, these are annual recurring increases. When you make these kinds of changes, you don't just make them for 1 year and then go, oh, I'm making too much money, I'm going to go back to the way I was doing it before. Okay, you're going to continue down that path and have that recurring change in what you're making. Okay, you can use a combination of these techniques to add 10% or more to your gross profit. And let's just kind of sit back and close your eyes and imagine, what could you do with that extra $1,000 or $100,000? So maybe you could get that car or the boat or the plane you've been looking at for a long time. Okay, maybe invest some of it in your future, like in your retirement fund. Maybe you're somebody who really likes to support particular causes or a charity. Okay, contribute there. You can delight your family with that luxury vacation you've been wanting to take them to. I think we're to the point where now people are starting to travel again. Okay, maybe you take them to wherever it is. Maybe it's Hawaii, maybe it's the Alps, maybe it's a special ski vacation. Okay, pay off those outstanding burdensome debts that have been holding you back or holding you down. So, whoops, I'm going to just say here, your desires might be different than these particular things that I've laid out, but you probably have your own visions. And regardless of what that is, don't throw them to the back burner. You need to keep those on the front burner and say, these are things I can have. These are things I can do. I just have to be a little smarter about how I'm handling my numbers. Okay. So this is kind of a recap about how job costing increases your profits. First of all, you spot your variances and you correct problems during and after the job. Okay. You can also then turn around and locate and charge for lost, or what I call invisible costs, things that have fallen through the cracks that you did not charge appropriately for. And again, that could be time and materials jobs. It could be change orders. Change orders are a real area where so many people can do so much better. Okay, you can spot and eliminate your losers. And we illustrated that in a couple of different ways. You can shift into that higher gross profit work once you know what it is for you. Okay. Add 10% to your gross profit by reducing your production costs by 5%. And then what you can do is increase your prices by 5%. When you start to get better and more efficient and so on, you're going to find that you can increase your prices because you become a more efficient, more effective company, and people are going to be drawn to you for that reason. And people are willing to pay just a bit more to have that quality work done. And then you can maximize your gross profit percentage. You want to make sure you do that before you increase volume. So one of the big issues that you have to kind of be careful of is a lot of people think, I have to get bigger. I have to sell more because I want to make some more money. In fact, you need to have the right gross profit margins in place before you start increasing volume. So you want to be very careful about increasing volume, okay? Because you don't want to grow broke. And there are a lot of reasons why it's not a great idea to increase your volume without really sitting down and crunching through the numbers. So you want to maintain that gross profit percent, and you want to consider, if you decide you want to grow your company, what's the impact of that volume increase on your company overhead? And in most cases, if you start bumping that volume up, once you get to a certain point, okay, I mean, you can't probably live on 100,000 a year gross revenue, right? But if you get up into a reasonable amount of revenue, when you want to go to another level by selling a lot more, that means you are going to have to hire more people. There's going to be more overhead. There's going to be more supervision and so on. So you are going to end up working harder. So think very carefully before you go down that, oh gosh, I want to make more, so I'm going to sell more road. Okay. So really the big bonus strategic benefit is that if you're tracking the kinds of work that are creating the best profits for your company, you can use that knowledge and you can make strategic and long-lasting changes to your company's business model. So this isn't something that you just, start and do for a couple months and then say, oh, now we know enough. We can just we're going to shift. In fact, you want to keep tracking these things, see what's going on. And so some of the things different people do is they might choose to scale down, actually scale down their operations a bit to fewer, but consistently profitable jobs. So they're not even having to work as hard and they're still making as much or more. Or you might decide you want to grow your company, but only after you get that profit margin up to what it should be. And then you have to really work on maintaining it, because sometimes when you grow, those gross profit margins start to slip again. Okay, you might choose to focus on a favorite niche. The notation is the riches are in the niches, or the riches are in the niches, however you want to say it. So this is where you can benefit financially from your specialized knowledge. So once you are specialized, again, this is a place where people are willing to pay more. Okay. I'm not going to pick on any particular thing, but for instance, let's say you become known as the best tiny house builder in the country, or maybe you do sheds, you make I can't even say it, she sheds and he sheds, or you are known in your entire community for doing gorgeous additions. Okay. I mean, there are all sorts of areas where you can specialize, maybe aging in place. But at any rate, if you can get into a niche and you get known for it, you're going to automatically be able to increase your pricing. So regardless of which approaches you decide to go down the path, and job costing is going to give you that potent set of decision-making and profit building tools. Your payback is going to be pretty impressive. So we're almost wrapping up here. If you guys would like a PDF download of these slides, you can go to buildyournumbers.com/busybusy, and you'll be able to go out and download the slides from today. If you want, you can contact us. You'll see buildyournumbers.com on all the slides. You can email us at info+acct.com. You can call our phone number. All of this is going to be available in those slides. So I'm just going to kind of move forward, and we've got all of our little gremlins in the woods. And I just want to check in with you guys. Are you kind of excited now that you know what you can do to improve your profitability? And maybe you're still feeling a little fuzzy about how to put your own job costing system in place. So you don't have to worry about those gremlins. We have some resources for you. We're here to help. So coming soon to a screen near you, as in your computer screen, okay, we have some solutions available. And Bracken and the folks at BusyBusy said it was okay for me to go ahead and let you know about the resource that we have available for you. And it's called our Construction Accounting and Management Program. It's online training. Well, we have different levels of it. The base of it is online training with lots of details and handouts and spreadsheets and done for you types of things. And then we do also have one of the versions. We've got 3 options. One is what we call Essentials, self-directed. Another one is our Comprehensive, self-directed, that has quite a bit more training in it. And the third one is we have our VIP program that is guided. So in addition to the online training, we also have one-to-one support and monthly webinars and so on to help folks in the VIP area. So those are some of the things that we have available, as well as a number of other job cost accounting support products. So if you come out to buildyournumbers.com, you'll find out about the Construction Accounting and Management Program. We call it CAMP. Okay, that's our acronym. And this week, CAMP is not normally open to the public, but starting a couple days ago and through this coming Tuesday, we are opening it up, and it's a monthly subscription. So it is open to the public at this time. And so if you want to come out to Build Your Numbers and sign up for the emails, you'll get copies in the emails, links to other videos and other background information. This has just kind of been a tip of the iceberg of what you can do with job costing.
Definitely. I mean, CAMP it's a big deal. It's a killer program, and it works so well hand in hand with BusyBusy and can really help jumpstart everybody's journey with job costing. So, I mean, it's awesome. And for those of you who are asking about pricing on that, there's different pricing for each of the options. And Diane, correct me if I'm wrong, but if you just click the link for the CAMP accounting program, you can find it on the website.
Yep. So it'll all be out there and show you what's included in each level. And it ultimately, I think on Friday, we've got an you can actually just go to the page and you'll see what's included in each level. But if you sign up for our newsletter, on Friday, we'll put one out that will take you out to a video where I go in depth in a webinar, exactly what's included in each level. So you can see it on the page, or you can have me just kind of walk through and talk to you about how and why and where we develop those different levels.
Perfect. Cool. Well, I mean, this has been great. Sorry for all my technical difficulties, often in and out. But before, I mean, we're grateful for everyone attending. And before we call it, we have some time for Q&A. We do have quite a few questions that have popped in and out. So let me go ahead and handpick some of those. Let's see. We've kind of talked about that. So let's see. Oh, and we just had a few more pop in. Perfect. Okay, so to start, what's the biggest setback that I could possibly run into when first getting started with job costing?
Okay, I think it's just kind of trying to jump in and do it without really knowing what's the best structural setup. Okay, so what I see lots of times is people will try to put all their cost codes into their chart of accounts. So QuickBooks is a list-based program. And it took me a couple years of working in it to really figure out, oh, you need to put this information in this list and that information in that list and the other kind of information in another list. So learning how to use the list most effectively is going to be what's going to guarantee your success. That and some training and, you know, some proofing and balancing types of things. But jumping in and kind of trying to make sense of it on your own is probably the biggest mistake that I see people make. And I end up doing a lot of cleanup for people. And that gets a little expensive too. So that's probably the biggest mistake is A, you're not going to get what you want. And B, it's going to take some work to get it all sorted out. And having bad decisions, you know, making bad decisions based on that bad information.
Yep, I agree. Very cool. All right, let's see here. Another one that I'm seeing kind of a lot of is, let's see. So hard to pick. You guys are asking too many good questions. So what would you say, just to kind of generalize these, what would you say to a business owner who doesn't think they have time to get started with job costing?
Okay. Yeah, boy, I hear that a lot. You know, how in the world am I going to stop and put something like this in place when, you know, I end up spending so much time out on the job and, and scrambling issues and so on. So let's say that you could earn, well, we'll go back to that round 100,000. Okay. Let's say you could earn another 100,000 a year. And let's say in the very first year to get your feet underneath you, to put a job costing system in place, you had to spend 40 hours. That'd probably be kind of on the high end. Okay. What does that come out to? $100,000 divided by 40 hours. How much are you earning per hour? I don't know. I'll do it on my calculator.
I should have pulled my calculator out.
Divided by 40. You guys can hear the calculator running. That's 2,500 an hour. Okay, so how many of you can afford to pass up $2,500 an hour in return? Okay, now the next year, it's not going to take you nearly as long. So let's say the next year you spend 20 hours. Okay, so now you're up into the 5,000. Okay, and then the next year, you're able to cut it down to 10 or 12 hours. Maybe you spend an hour every month looking through things, thinking about it, making decisions, and so on. Okay, so every time you cut that down, you're by half, you're earning twice as much. So, you know, you're going to be up by the time you get into year 3 in terms of your time investment to making about 10 grand an hour if you're $1 million company. So I guess I just have to say, is it worth it?
Yeah.
That's a decision you have to make.
we hear that question on occasion too. And, just to reiterate what you were just saying, we were actually talking to a client of ours that, he's been super successful and just continues to increase his profitability on jobs. And the comment he made was, he just told me, honestly, one thing that he's realized is if you don't have time to run time for job costing, then you don't have time to be more profitable and run a profitable business. So, I think that's a big eye opener, and he's proving that. So cool. All right, let's see here. This is a question that let's see. There's so many of them. A lot of questions about if there will be a recording available. Yes, we will send that out. And yes, there is a link available to download the slides, which I can post here in the chats, or I believe you can see.
Yeah, just go back. Here. I'll go back a couple slides. Give me a second.
One specific question for you, Diane. Yeah. We have somebody saying here that they are doing job costing now, but they would be interested in seeing some differences in how it can be improved. Do you offer consulting services?
Yes, we do offer consulting services. We have a needs assessment, where we can take a look at your QuickBooks file and look at several other pieces and say where do we see that you could potentially do something more with your structure, or use your numbers in a slightly different way, or add in some background features that maybe you didn't think about. So yeah, that's certainly available.
Okay, awesome. Good to know. Another one, let's see, we have someone saying they're not worried only about the wasting time of learning to job cost, but also worried about wasting money on job costing. Are there other tips besides what you've said already on how to avoid that?
Yeah. Okay. Well, most people have QuickBooks, so they, probably have the tools at hand. I guess wasting money is kind of a relative term. I don't know what else you would spend money on other than, learning how to do it and getting your data in. But the payback is so huge. It's pretty, the cost of doing job costing is going to be in the training. Okay. Getting trained on the front end, learning how to check your numbers. But otherwise, you're working in the dark. You're kind of, I'll go back to this next slide. It's kind of like this. You're out working in the dark, and there's all sorts of little gremlins sitting there waiting for you. So I grew up I grew up in a family where I heard my dad say regularly, you got to spend money to make money, which means you have to invest in your training. And I know one thing, that if I was having a construction job done, I wouldn't go to the person that didn't know what they were doing. Okay. I'd probably look for the person that looked like they know what they're doing. And, there are a lot of different aspects. It's not just the physical on the construction side. It's not just the physical part of what you do, but there are so many other aspects to running a professional company. Okay. And being able to report appropriately to your customers. If you're doing a time and materials job, you've become your customer's accountant. Okay. You're giving them all that background detail. So unless you're doing all fixed price jobs and aren't worried about the change orders falling through the cracks, I'd say you really need to be thinking about putting a good management, accounting, and job cost reporting system in place.
Right.
So other than that, it's the training, the time of training, but that's a ongoing payback. Okay. So on the front end, it's an investment, sure, but it is an investment because there's the investment is going to give you a big return. Okay.
Right.
So.
Okay. Cool. Well, I think we have time for one more question.
Okay.
Let's see, and I do like this one, especially if people are just wanting to kind of start by dipping their toes in. What is the number one thing I should focus on if I'm wanting to get started with job costing to begin succeeding quickly?
Okay, well, I'd say, learn. Okay. And I mean, you can certainly go out and Google, how do I do this particular thing? How do I do that particular thing? But again, having a guide who's been through this process and knows exactly what steps to take and so on is going to be the fastest and easiest and best way for you to get going. Okay.
Right.
That's why I developed the program. So for years and years, I did one-to-one training. As soon as we could figure out how to connect two computers together, way back in the day, okay, I was doing one-to-one training to show people how to do this. And ultimately, because of the beauties of streaming and the internet and so on, I decided I was going to develop this set of classes because it's so painful to learn these things. I mean, I had many years of accounting behind me and it took me a couple of years to figure it out. Okay. Exactly how to put everything together in the best way. I mean, on the front end, I was able to make some things work, but not in the best way. Okay. So, yeah, that's why we developed the program. So I totally believe in this program. I know that it's going to help anybody who wants to get into job costing or improve their job costing. It's going to get them there in the fastest and the easiest way. So, okay. So I think I've lost Bracken again. I do see Ryan out here. Hi, Ryan, you're muted. But there we go. Oh, he's taken off his headset. There she is.
Oh man, you guys, for a tech company, I'm sure having some issues.
Okay.
Oh man.
Well, tell Ryan
All
I said
right.
hi. I saw him hop in and out
I
again.
will.
So yeah.
Awesome.
Okay.
Well, did you answer that question fully now
Well,
that I'm
I
hopping
think
halfway in?
so. I mean,
Okay,
it
cool.
was I mean, it's definitely self-promotion, but I sure wouldn't have done this if there were,
Right.
if there were other programs out there that taught people this type of thing, but there just don't seem to be much of
Right.
there's not much out there. Okay.
Yeah.
It's pretty much trial and error. And that's certainly a painful way to go.
Oh, for
So,
sure. For sure. Well, thanks, Diane. I mean, that was awesome. And for all of you, all the questions that we didn't get to, I haven't ran this by Diane, but typically the process is we'll reach out to you guys via email, or Diane will give you a call, one of the two, and we'll make sure we get all the rest of those questions answered. But we
sure.
really appreciate you, Diane. We appreciate everybody for
Thanks.
joining and engaging and for putting up with my technical difficulties. But
That's
yeah,
okay.
it's been a great webinar. It was awesome.
Thanks. And I'll mention if you go out to buildyournumbers.com, we've got all sorts of blog articles. There's free training of various types out there, other videos that we've done and so on. So we've got a wealth of resources as well
Awesome.
as, camp and several other products. So go
Cool.
out, cruise around, take a look. We're nice people. If you want to call us, we'll answer your questions. And, it's all about you.
Awesome. Well, thank you so much. Thanks, guys, for joining. We really appreciate it, and we look forward to seeing you guys next time.
Okay. Thanks so
Okay.
much.
Thank you. Thanks,
Okay.
Diane. Bye, guys.
Uh-huh.
Have a great weekend.
Okay. Bye-bye.